Investor psychology is a funny thing. So today we're getting a lot of press about the fact that the market, the stock market in the U.S. anyway, has by definition entered a bear market. So you've already seen some talk about this already on our site and other places. But what does that mean exactly? What that means is that the market has moved down 20% from its highs. So if we put its highs up here occurring late last year, and then of course all the way down here to today, that just barely exceeded it. It was 20.3%. So, what does this mean? Well, really, it doesn't mean a whole lot more than what we already knew. But from a psychological perspective, this is kind of like those round numbers. It's kind of like 10,000 on the Dow. It's something that traders pay attention to, and it can create one of these feedback loops where traders get more and more bearish the more bearish they become. It kind of feeds back on itself over and over again. So we're going to be watching this very carefully. But with a broader decline in stocks, if we continue to see stocks struggle, which is, how does this play out in the forex? And there's a couple of obvious places. Obviously, we expect to see a little bit of appreciation in the yen. We're already seeing that today with the yen getting stronger. That's not necessarily because of the yen's inherent strength as much as it is just traders finding themselves in a short squeeze. So those short yen positions are becoming less attractive. That drives this buying frenzy to try to cover those short positions, and it'll go up and down with equities as traders develop an appetite for risk and try to buy equities and short the yen, or develop an aversion to risk, which is the situation right now where they'll sell equities and they'll try to avoid the yen. Uh, but there are a couple of places that I'm looking for some trades. One in particular right now that's just jumping right out at me is on the majors, actually. So there's a specific major I wanted to take a look at today as we think about if this bear market continues for another 5 to 10 percentage points. Of course, the dollar franc has been stuck in a pretty solid downtrend for a while, and lately has been consolidating after an initial correction in March and April of this year, but has been consolidating in this tighter and tighter range. It's kind of like a flag, but like all consolidation patterns, what it really means is that the market is moving in a tighter range, and when it breaks out, is likely to break out into a trend. So grabbing that breakout and trading it as a trend trade is not such a bad idea. Now, we're getting real close to this upper range, which is one of the reasons why I'm wondering if the trade is basically here right now with the turnaround today. We may get a little bit of whippiness back and forth, if that's a word that you can use to describe the market, but a little bit of a recovery back up here to 104, 8 or so. And you'll notice that if we back up from this a little bit, this is in line with a longer term trend line we've been watching for a long time, which is where the market broke out again here in February. If you look at what was happening on the stock market at the same time there in February, it was beginning to collapse after a little bit of a correction to the upside. So we're up against that exact same resistance level on the franc that we were dealing with back in February, turned into a really strong position to the downside. Speaking for myself, I missed actually most of this particular trend here, and I would not be surprised to see a repeat performance down into the sub parity range. So getting down into 9,800, even 9,700, before we see another consolidation on the dollar franc. If we continue to see the breakout to the downside on stocks, which now appears to be fairly likely, this could be the trade. One of the best trades available in the forex over the next few weeks.